The worst part is that in my shoes, most people don't want to hear it and they don't want to talk about it. And that's why my wife would say to me when we go to Thanksgiving dinner, not a damn word out of your mouth, man. Not one word. You shut up. I want to stay to the end of dinner tonight. Because I try and help even some people in my family, do you not get it? But that just ends in divisiveness and more anger. And you're now defined by who you voted for in the election. And there is no more calm, rational discussion. And you know what? If you never listen to another viewpoint, you never grow. I don't want to go down this road. People will get very angry at me, but I want you to know that all of this stuff has consequences, and the consequences are on the global stage. And it all boils down to, why would we hold debt and or currency of a country that's lost its bearing, that it no longer is the envy of the rest of the world, and is broke, and is insolvent, and is hypocritical, and is weaponizing the dollar, and on and on and on. And this is why you own gold, not to become wealthy, but because it is wealth. And the central banks are showing you. This is why I do what I do, say what I say. Yeah, I own a business that sells precious metals, but I'm not the poster child for Finance 101. I'll tell everyone out there, I am fully invested in precious metals. I own one of the biggest metals companies in America. And the only other thing that I invest in, I have mining shares, physical precious metals, and I know I'm sorry for going down this rabbit hole. If every $4,000 increase in the price of gold adds $1 trillion free and clear to the TSA, the Treasury General account, or TGA, the Treasury General account, and Janet Yellen wouldn't even need congressional approval to do that. She would just need to tell Jerome, hey, revalue the gold right now and put it at $20,000 an ounce, and that adds $5 trillion to the Treasury. Just like that, free and clear, that they can spend any way they see fit. Like it started in the UK last year. They tried to normalize their balance sheet. They tried to impose austerity. What happens? Their pension program, poof, it starts to vaporize. So what do? They backtrack. We're sorry, and go the other way. The U.S., we try to normalize rates. We try to normalize the balance sheet, quantitative tightening, rates are rising, and poof, the banks start to fail. And oh boy, we better not go higher than 5% on the 10-year. And now they're calling to go the other way because the system is so fragile. Just like the yen, they try to raise rates, strengthen the yen to protect their own sovereignty, and poof, everything goes nuts. And it wasn't just the United States. It was Singapore, it was South Korea, it's here in the United States. The ramifications are far reaching. So what it really is emblematic of, Danny, is that the whole Western financial system is so over leveraged for 15 plus years of low interest rates. And in the case of Japan, almost 3 decades of zero bound rates creates and incentivizes massive amounts of debt. And when you then try to raise rates and normalize things, servicing that debt can become very tricky. And when you add in all of the leverage of the financialization of the world and the way that everything is so commingled systemically through derivatives, $2 quadrillion in derivatives, it becomes that much more dangerous. But what it speaks to is that Japan, the UK, and the US, 3 very broke, insolvent countries, will probably never be able to normalize their balance sheet. And maybe that's why everyone keeps talking and hearing the word reset, because you can't go back without creating a tremendous amount of pain. And the United States, I think, if you look at 2008, Danny, if they just would have let the forest fire burn, it would have sucked. But we'd be on our way to recovery way long ago, because if you look at what happened after the great financial crisis in 08, the Fed's balance sheet was $800 billion. And a year ago, it was $9 trillion. So since that point, the way that they remedied the situation is by messing with Mother Nature again. It's all about suppression of interest rates. So they stepped on interest rates, which incentivized massive debt accumulation, both by the public and by the state. But more so, it destroyed price discovery. It creates misallocations of capital and resources. Companies, they hire more, they build on other divisions, they might buy another building. Same thing with people. Low interest rates, they buy a house that they shouldn't buy. That's probably more than they can afford because rates are so low. And they refinance and take equity out of their home and buy a whole bunch of stuff and take trips and do crazy things. And now what? When rates rise, what do you do? And I think that's the problem here, is that these low interest rates have created an environment that is very difficult to get away from. Very, very difficult to get away from. The entire West has the exact same problem. And that's why I focused a lot after Klaus Schwab said there'll be a great reset. You'll own nothing and be happy. I mean, look at house affordability. Because of the distortion in and the suppression of rates, and house prices got so high, the majority of young kids could never dream of owning a house right now, especially as rates go higher. So the distortions need to work themselves out. If they just would have let the forest fire burn, it would have sucked and there would have been a lot of pain. But look at a forest after a fire a few years later, it's stronger than ever, as would we have been. Mother Nature will not let us get away from this unscathed. So it's either to fully inflate your way out of the problem, which ends up to higher rates and the whole system blows up. Default. I've gone with find a villain for the last 3 years by incentivizing the world to dump dollars, to shed our petro status, to go green, to weaponize the dollar, to let the country fall apart and make everyone say, shit, why am I holding dollars in treasuries, and dump them? And then we can point to the villains that did it, Xi Jinping and Putin and OPEC. And option number 4 is an interesting one too, that you hear more and more and more and more people talking about, and that's to revalue gold. Even Senator Loomis from Wyoming, after the Bitcoin conference, right after Trump spoke, she was the next speaker and said her bill was to revalue the Fed's gold to create enough money to buy the Bitcoin, to take some of that proceed to buy the Bitcoin, to create a strategic Bitcoin account. Just like the head of the Dutch National Bank has been saying for over a year, that the gold and the gold revaluation account, I mean, that's the name of it, you can't make it up. We could revalue it and make our balance sheet pristine, just like that. And if you think about it, that would be one move that we could make. You put gold at $100,000 an ounce. And people say that's insane. Well, why is it insane if Bitcoin can be $1 million? I don't think it is insane. It's just people's view on things. It's the suppression by the Western banks that have never let it reach its price. But if every $4,000 increase in the price of gold adds $1 trillion free and clear to the TSA, the Treasury General Account, or TGA, the Treasury General Account, and Janet Yellen wouldn't even need congressional approval to do that. She would just need to tell Jerome, hey, revalue the gold right now and put it at $20,000 an ounce, and that adds $5 trillion to the Treasury, just like that, free and clear, that they can spend any way they see fit. That's about the one thing that we could do that could fix the balance sheets, but also make every country on the planet probably happy, because every single one of them has been stockpiling gold, and just about every central bank in the world owns some gold. So that's an option that's not off the table either. You got 4 options: inflate, default, find a villain, or revalue gold. I don't know which one it is, but something's got to change, Danny. You can't keep creating $1 trillion of debt every second, 24/7, especially when you have 10 to 11 trillion in debt that needs to be either refinanced, bonds that are coming due that the Treasury doesn't have enough money for, so they need to sell more bonds in order to pay the interest on the old bonds. That's like a Ponzi scheme, if I'm not mistaken. And this goes out to 2030. And, at 1% rate, 500, or 5 trillion in debt is a 500 billion payment. But at 5%, it's a whole different thing. So, yeah, there's going to be something that happens that breaks the system, resets the system, whether it be painful or not, or there's a villain or not. I don't know. But yeah, something's going to break. I'm fairly certain of that. So the Japanese yen carry trade debacle is just a sliver, I think, of what has to happen for the Western system to deleverage, because the amount of leverage they've created has to be dealt with and has to be reckoned with. And when rates and asset prices find equilibrium, those asset prices will be a fraction of what people think that they actually are now.